Okay, so jumping right into it. New year, new beginning for so many people out there who are interested in the start to trade futures. Maybe you shifted over from Forex or options, and now you have this interest in wanting to trade, say particularly the indices on the future side. The NASDAQ futures, the ES futures, whatever it may be, because there's a variety of different contracts or instruments to trade when it comes to futures, all right? Now, here on this channel, I stress and I talk about number one thing, market structure. You have to get the market direction correct, whether it's making higher highs and higher lows, reversing, making that pattern, which I talk about when you can see the sign of the reversal happening from the upside to the downside. But we have to be able to understand and see the aggressive points in which within the market where it's making and breaking structure. Now, I like to use multi-chart confluence, meaning I like to mark up a higher base zone first off my higher base chart, and then after I mark that zone up, moving down to a lower base chart and looking for a lower zone, okay, all high probability, because there must be one thing, and you guys know what I'm getting ready to say, what marks or makes the difference between high probability and low probability is that imbalance resting back at the zone. Have to have it, okay, because I like to trade high probability setups only, okay? Now, I'm not saying low probability setups where there's no gap or imbalance resting back at the zone is going to, or, not going to work. They will, but, sometimes, but if you go back and back test things, you're going to see the high probability setups where there's an imbalance set work a whole lot better time and time again versus low probability setups. Now, in this video, let's talk about 2025. This you want to become your profitable year, the most profitable year you've ever stepped into or had in your trading career. What strategy are you going to use? Do you use support and resistance? Do you trade supply and demand? Do you do breakout and retest trades? So whatever you find is working for you, I always say stay with it and continue doing it. Okay, as long as you're profitable. But here on this channel, I like to talk about supply and demand. Now, for me, it's all about getting the structure right again. I'm going to show you in today's video, in reference to structure of the market, what you need to be looking for. We're looking for those aggressive pushes where the market is breaking through an area of a high or a low or breaking structure. And then looking back at the higher base chart to mark up a beautiful zone in which we can take interest and trade off of, and then scaling down or refining down to a lower base chart. I'm also going to show you a good tool that someone shared with me that actually works, and I mean, I haven't really technically put it to the test myself, but I know that if you follow this and in time, it's all about building capital, right? We're compounding growth either on a small or large size account, but I'm going to do this. I'm going to say, let's take $1,000, right? And using this spreadsheet, just say, for example, we're looking to gain percent, all right, on the day, a certain amount. And then we're going to have our loss set at a certain percent just as well. So let's say we're looking for to make a 4% gain a day. Okay. And that's accruing or compounding per day. We're looking to each time we say, for example, we deposit a certain amount of money into the account, and then we're looking for growth of 4%, let's say, for example, on that account, or more, whatever your amount is to be. We're compounding or accruing on the daily a certain percent, okay, to which we're looking to, make versus a certain percent, at a maximum, which we're looking to loss. All right. You should have kind of either percentage base in your mind. For example, you don't want to risk but so much of a percent of your account when trading. All right. Especially when you got a small account. All right. So first and foremost, if we're looking at structure, and I'm going to show you, an example of the spreadsheet and how you can, what you can possibly use if you choose to. And you'll see as month to month goes on, how a small amount can turn into larger amounts if you are simply looking to grow an account by 4% every single day. All right. So basically you're taking, an amount of money, all right, looking to make 4% starting off for day one. You accrue that, it goes into the account, and then day two, whatever's in the account now, your account balance. So basically each day as your account continues to grow, you're looking to make 4% on that account and continue building it as it accrues daily. All right. So first and foremost, with structure, what we're looking at is what? Higher highs and higher lows. Now, if you have a hard time, I'm going to say this right now, identifying or looking for real good zones to trade from, then wait. I'm gonna say this right now again. Wait for this major structure breaks. Now, if you're doing so off of a higher base chart, which you're probably going to get the best opportunities when you get a pullback to a key area of supply or demand. In this case here, we'll look at demand because the market has been bullish, looking at the higher base chart, right? The 120. You can do this from a 60-minute chart or whatever it is your higher base chart you like to look for or trade from, not trade from, but when you like to look for as far as mapping out your direction of the market. I don't take my trades from the higher base chart, my 120, but I definitely use it to mark up my first level of zone from a higher base chart based around the direction of the market. So I see we're making higher highs and higher lows. And what I'm trying to say now, pay close attention, is if you're having a hard time where you see the market just made a high and then it starts folding back and you say, well, I don't really know which way to trade, then just wait for the market to show its hand. Either it's going to break through and take out a major high that it's made, or if it starts pulling back and then you see it make a lower high, say for example, all right, and then it comes down and takes out a low that it just made, then wait for the structural break on the continuation to the downside. This is a major breaker structure at a high. This would be a major breaker structure at a low. As you can see here, the market came back and broke it here. Now, if you do that, of course, you say, well, if I did that, then I wouldn't be able to take any trades. Say on the 16th, I have to wait for the market to either come down and break it below this area here on a pullback going lower, or to come back up here and take out this high, which it did the very next day, which was Friday on the 17th of January. And when it did that, it made a beautiful run to the upside here aggressively. So it made an aggressive run to the upside, pulled back pretty nice, swings to the downside, making lower lows and lower highs, comes back, breaks this area structure, which is a major high, and then it pulled back to this key area of demand. As you see where it pumped into or tapped into this major area of demand right here, because this is a gap on the zone, back at the zone, and an imbalance there. Everyone that's been following the channel, you know what I'm talking about when I say imbalance or gap. That is the area left back at the zone. The market taps into it, and then what happens? It blasts to the upside, taking out now this most recent high that it just made. So now it's taking out another major high to the upside where it broke structure again, and it pulls back right here. Beautiful area of what? Beautiful area of demand with a small imbalance attached to the zone here. And it bounced and rejected. And that would have been a good area to take a trade from. Of course, I didn't trade today because of, of course, things in the, well, first and foremost, the banks were closed, okay? And then you had inauguration today, so I stayed out of the markets because I don't know what the market's going to do. And the markets had an early closure just as well. I don't trade when they're on bank holidays when the banks are closed, okay? So that's a no-no for me. I stay away from those days. But what I'm trying to say is look for the major structural breaks if you're having a hard time figuring out, and don't want to take trades from smaller swings. These are minor swings right here, okay? So these would be minor breaks of structure to the downside. This is a major. This is a major. Major high, major low. It starts breaking back up and starts taking out these minor swings. This is your major swing. So on a leg, you may have multiple swings to the downside on a pullback, right? But that's your major high. Once it takes it out, you can look for something to come back in the market is to stop at some zone and possibly react there. Once it does, I talked about this, I think, last week on a video too. There was a high probability zone off the 24 range chart on the inside of the 120 range chart. I talked about that. If you don't know what I'm talking about 100%, please go back and either watch Thursday or Wednesday's video sometime last week. There was a video where I talked about the trade that rested on the inside of this zone right here back at the 21,500 NASDAQ price level, okay? There was a beautiful high probability 24 range zone with a gap attached to it. Here on the channel, I'm looking for multiple chart confluence, breaker structure, pullback, first area, mark up the higher base chart, the zones right here, demand area, then move down to the lower base chart to find a 24 range demand zone, high probability as well, resting on the inside of the larger zone off of our higher base chart. That's what I'm looking for, and that's how I trade in reference to the strategy. All right. So with that put to the side and you understand structure breaks, again, look to see and wait for major structure breaks if you have a hard time trading, because this kind of confuses you where it starts to pull back. And then you say, well, I don't really know. Should I be looking for short? Should I be looking for longs? Wait for the market to pull back where it's breaking structure lower and then either take out a high or break lower and take out a major low. At this point here, it pushed up, broke this area. Had it pulled back right here and then came back down and broke this low, then look for an opportunity to continue going short, because now it just broke through a major low right here. All right. Hopefully that makes sense. Just like right here, broke a major area structure to the upside, took out the high, look for a pullback before you can take a trade going what? Going back long. Okay. All right. So outside of that, I want to talk about, how you can turn and make 2025 one of your most profitable years. Just basically allowing, regardless of how much you have. If you have $1,000, we'll say that. We'll use that as the monetary or the amount we're using in this video here. $1,000 you start off with, right? Again, if I'm trading with $1,000, I'm going to start off trading with the micros. I tell anyone out there, if you start to trade as a beginner, trade the micro futures. Why? Because you're not having to leverage much in the account. So you're not really worrying about at the end of the day, if you take a small loss on $1,000 because you're already trading with a small amount of capital as well. But you can build $1,000 account up over time if you know what you're doing the correct way, and then you can step up and start trading the E-mini futures, the larger amounts. There's a difference there when it comes to margin. Of course, you guys should know that, and the tick value size as well. Micros start with if you're a beginner, okay? Because you're not risking as much when you start to trade. Now, let me show you this right quick. All right, so this is a spreadsheet that someone shared with me, and it makes sense and it works if you can follow and stick to this regimen of allowing your account to accrue each and every day. And no, I'm not going to be sharing the spreadsheet and putting it out there in the community and all that stuff. I'm not going to be doing that because it's simple math, guys, to be honest with you. All you're doing is putting in one field, a certain amount, and then looking based on calculation. You can see the calculations right here by the sales on the spreadsheet. But anyways, $1,000 we say we start with, right? Let's change this to $1,000 right here. We'll start with $1,000, okay? All right, $1,000 right here. Let's say this is day one. Let's just say it's a Monday, even though it says Tuesday on here. We're looking to make in profit and accrue or grow our account 4%, right? So 4% on $1,000 is $40, right? And our loss, we're only looking to, have a risk loss amount of only 3%. That's $30, right? So if we meet our target, okay, starting off trading the micros and accrue or make $40 on a day, then our account goes from $1,000. We made profit of $40 on day one to $1,040. Okay. All right. So the next day we're going to have $1,040 in an account. Okay. And then we're looking to do what? Gain in capital or in profit 4% on $1,040. Okay. So we're looking to, let me say that again. Day one, we made $40 in profit. So now we have an account size of $1,040. The very next day, we're looking to do what? Make in profit of 4% on $1,040, which is $41.60. Our loss is only going to be 3%. $31.20, which means that we're looking to make day two $41.60 and only have a loss on day two of $31.20. That's going to be our stop loss area, right? So you're not risking as much, okay, as you're looking to profit. And that's what you want. You want to make more in profit than you're actually risking. So then we made that day two. Now we've got $1,081.60. You can see it starts to compound daily, right? And the next day, we're looking to make 4% on this amount here, which is $43.26. And our risk or loss is going to be $32.45, right? You see that? We've made up $43.26, and it just keeps capitalizing or keeps growing and compounding day to day to day. Now, this, say, for example, this was like, say, April the 9th. If you go 30 days out from there, just go 30 days out. Let's go down to May. This is just a hypothetical, situation or case by scenario here. Within the 30 days out, okay, we're down here in May 9th now, say for example. Now the account has grown. If we continue to compound on 4% daily, that's a small amount we're looking to make. Compound daily on 4%, then your account size will be up to what? $3,243.40. Okay, and then it starts over. We're going for the next 30 days. All right, day 30, we're looking to make now $129.74, which is 4% of that amount. Okay, and then the risk or the loss is going to be stopped as far as the amount we're looking to take a loss on is only going to be $97.30. Profit should always be higher than the loss amount, right? And then if you go down, now we're down to June, say for example, pay attention. Now we went from where we at? Right here where we were at on May 9th, $3,243. And now we're down here on June the 9th at $10,940. This all comes from allowing the account to accrue and compound at 4% on a daily, meaning you're looking to make 4% based on 4% on whatever you have in that account, and to continue growing it at 4% every single day, with only risking 3% of that account, okay, daily. That's it. We're looking to make 4% on the account. All right. So we're only risking to make 3%. We're only risking 3% on the account. So as long as you continue doing that, we'll keep going down. July the 9th, we're down here now. We're at $10,940. Now we're down here in July at, which is a month later, okay, at $35,484. Okay. Again, at that day there, we're looking to make 4%. So we're looking to make $1,364.77. You know, just on average, right? At this point here, you know, when you start getting around maybe $10,000, you probably want to start maybe shifting over and start trading the e-mini futures, and things can kind of start ramp up at a faster pace in a sense, because now you can trade the bigger market, okay, where the not the margin, but the tick value is higher. Again, we're here at $35,484, compounded and allowing our account to accrue and earn and make 4% each day. We're looking to earn 4% on the account size each day. All right, from a month out from that, we'll stop at, say, 8-9. 8-9, we're doing from 35,000 now to 119 by simply accruing or compounding 4% on the day, okay, off the size of our account each and every day. So now we move down to, okay, it doesn't go down further than that. I could have kept going with it all the way down to September. But you can see where it stopped at $233,000. Now, and that's not even a full-on 4 months yet. I don't think so. Let's see. No, it's not. Yes, it is. It's 4 months. So it's a little more than 4 months there. Almost 5 months, okay? And we're at $233,000. All simply by trying to capitalize on and accrue 4% on the day based on our account size. That's all we're doing. Every day, 4%. Next day, 4%. And it keeps adding on, and we're looking to grow that account 4% on the day. That's all it is. But we're only looking to risk only 3% the size of that. There's nothing wrong with that. Again, you want to have more profit, or look to your profit amount based on percentage should be higher than the risk amount or your loss amount. Okay. So hopefully that makes sense. Someone shared this with me, and I just kind of used it and put it in $1,000. And it's a great tool, a very, very, very great tool. And all you're doing is, the simple math is whatever you start with times 4%, you know, and anyone who has Excel or spreadsheet, you know, experience, you know, here's the, you know, formula for the cell right here, and you can just drag it out. Formula for the cell right here, you can just drag it out, whatever the case is. But that's all we're doing right here, guys. It's just trying to accrue and compound 4% on the day. And if you can do that day to day, you can see $40 on a $1,000 account should be very easy to get trading the micros on a day. I mean, really, the math on that, if we're trading the NASDAQ, say, for example, 20 points, right? And I'll talk about this, stress this, 20 points times 4 is 80 ticks, times the tick value is 50 cents a tick. That's $40 right there. You could get that on one or two small scalps off the NASDAQ on a day. And you're only risking what? Take a look at it. 20 times 4, 80 ticks times 0.5. You're only risking one contract. One contract will give you that $40 you need. One micro contract. So you can imagine trading 2-3 contracts, right? Okay. So it's very simple to do. I mean, even if you like say, okay, I can't get the full on 20 points on the first trade. Well, 10 points. 10 points will give you $20. Okay. So then just scalp that 2 times, or you can go 10 points and go in for 4 ticks, that's 40 ticks, and then go for, which is the tick value size is 0.5, right? Okay, that's $20, then 2 contracts. You trade with 2 contracts to get your $40. So you can definitely do this and watch a $1,000 account grow if you can compound it and simply gain your 4% on a day. And I know there'll be individuals out there that will say, well, that's only if you can get, gain profit each and every day. That's not going to happen every single day. No, it may not possibly, may not happen. You may have a losing day, but still, I mean, think about it, only risking 3% of your account size, a small account, and watching it grow. I mean, this is something to look forward to, correct? I mean, we're talking about you not having the mindset of trying to continuously blow accounts, but taking a small size amount of money and watching it grow in time by, being smart about things and being logical in a sense in terms of small little chips here and there. Okay. taking this small little chips, profiting each and every day and watching things grow over time. Not sitting here trying to take $1,000 and flip it and make $5,000 by the end of the week. You're going to blow an account that way. But just chipping away at it each and every day, this is definitely doable and definitely can happen, because when you start moving up to these larger, size amounts that I just showed, as you get into like month 3, maybe month 4, 4% on that account, is not a lot of money. So trying to make $1,000 or $2,000 a day on a couple $1,000 size account, a couple $100,000 size account, that is definitely doable. Okay, at that point, if you got the kind of money built up and compounded in an account, you definitely know how to trade the correct way and are looking for good setups where the market is pulling back, especially where it's breaking major area structures off a higher base chart. So spend some time studying the strategy, spend some time back testing the strategy, forward testing it, and see if it's going to work for you. If it doesn't work for you, then just move on and find something that does. But I just want to share this with you and let you know that it is definitely possible. Trust me, okay? It is definitely possible to be able to trade a small size account and watch it grow to something larger. All right, so without further ado, that's it. All right, so I thought I'll share that with you guys, and hopefully you understand what I'm talking about there in reference to that. You can do the simple math there. It will compound and accrue fairly quickly, and as you can see here, that was just simply like 4.5 months of accruing a account size like that. All right, and a lot of people probably will, I'm sure, probably say something about that, whatever the case is, but it does work. It does work systematically, and it really can work correctly if you know what you're doing and you just gain those small amounts. I talk about compounding each and every day. You don't have to go in for the full win. Meaning so many people are simply out here trying to take $1,000 and turn $1,000 into $5,000 in 1 week. No, take the small gains. Okay, take it and build that account. If you're working a full-time job, take $1,000. Know how to trade the correct way. Watch it grow. So then, within 4.5 months, 5 months, you're still working that job. You say, I didn't grow this account to almost this much here. Then maybe you start to think, maybe 6 months, I'm going to start to shift from this full-time job that I was working, which I'm not happy at, to now I'm going to go ahead and start trading futures full-time for a living. Okay, that's how you do it. All right, but that's all I want to share with you guys today. Hopefully you guys found some value in today's content. For anyone out there who's interested in joining the Discord, the link is down in the description portion of the video. Just as well, anyone who's interested in gaining access and becoming an elite channel supporter, it's only $6.99, but that's where the meat and potatoes, the full-on substance to what I talk about, where I break down these trades that I post over on our Discord community. So to gather an understanding of the types of setups that I take surrounding the supply and demand zones, as well as the strategy, the full-on strategy. That's why I break things down, guys. I'll be honest with you. I talk about where to place your profit targets, your stop losses, what I was thinking, my full-on mindset before I got into the trade and what led me to take that trade. Also, you get the video playlist and a great video that I did covering market structure for anyone out there who's struggling with that concept, okay? It's there. So you can find the link to become an elite channel supporter right below the Discord link down in the description. That's up to you guys. I appreciate and thank everyone who are loyal supporters and who have been, taking the time, definitely watching the video content. But for anyone out there who is an elite channel supporter, thank you for supporting my efforts as not only a trader, but as a content creator. It greatly appreciate that. But outside of that, please make sure to subscribe by clicking on the sub button. Make sure to turn your post notifications on by clicking that bell. And last but not least, again, if you found value in today's video, drop a like on it right now. Go ahead and click that thumbs up button. I appreciate it. Take care. I'll see everyone, well, basically tomorrow, because tomorrow is the beginning of the trading week for me. So we got 4 days this week, not 5, but 4 days left in this week here, because today was a bank holiday. And have a great trading week. I hope everyone has a profitable week as well. Take care.